Good day. Jeffrey Friedman, Senior Market Strategist, RJO Futures, with my comments on stock index futures. Today, March 21st, a Friday. What's the word of the day? And I always give you the word of the day. And I was debating it, but I came up with it's the Fed. The Fed had the most impact on this rally going up this week alone than China, which was a negative, Russia, which is a negative, and here we are flirting with the all-time high of a 5-year bull market. Last week I said that the trend was sideways to down. We have turned with this rally this week sideways to up, and we are flirting with our all-time highs. Now, have said that, our economy is moving along slowly but up. Okay, just to give you an idea, this week alone, we had modest to improvement in a lot of different areas. Manufacture was good, industrial production was good, capitalization was good. Housing, the starts were weak, but the permits were good. Permits are more important than starts. That means that's a forecast of when they're going to break ground. Starts are the breaking of the ground. And we're really just kind of getting into spring. So that's good. Initial claims and employment kind of gauge was neutral. Existing home sales neutral. Philadelphia Fed was good. Leading indicators were good. Not robust, but good. So, have said that, in the United States, our economy is improving. In China, it is contracting slightly. So that should have been a negative and was temporarily, but not anymore for the moment. And of course, Russia and war and that kind of situation would be a negative. And right now, we are positive on the day, positive on the week. So I would have to say that the Fed had more impact. Now, there was a lot of deciding which way it was going to swing. The chairman of the Federal Reserve indicated that interest rates on the short end of the curve would move up higher, possibly shorter time period than first indicated. So now they're talking about 2015 versus 2016, okay? And right away, the short end of the curve jumped, and the stock market didn't like it, and we had a pullback in the stock index futures. Now, I've said that, we kind of came back because there has been a valuation. So now let's look at the technicals now that we've analyzed the fundamentals thoroughly. And on a technical point of view, sideways to up, I would have to say that there's resistance around in the June contract, S&P, the broadest index and the most volume in my opinion. I'd have to say 1880 would be minor resistance. 1888 would be big time resistance. That's your all-time high. And some people are projecting on looking at the charts that if we can go over on a closing basis, 1880, that we're going to power our way all the way up to 1920 on the way down. Where would the bears take control? Well, they'll take control around 1840. And we seem like we're a long way away from that, but only 5 to 7 days, and we were right there. So you could see how fast and the volatility in the stock index futures can move, and we could turn on a dime if we get some shocking news that the market participants have not anticipated. So with that in mind, these are the numbers that I would write down on my little pad and looking at the charts. 1840 definitely, 1861 on the way down, see if it will hold. On the way up, 1880 if we can break through, and then maybe 1888, but surely the thought would be 1920. In my opinion, I would go with the easiest flow of water, seeking the easiest resistance. So keep that in mind, and if you need what that means, you should be calling me. Good luck and good trading. Futures and options on futures may involve substantial risk and may not be suitable for all investors.